This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Out on a limb. Well-known investors are making big calls on the market, but should investors frustrated with lackluster returns follow their lead?
A sea change, how the Panama Canal plans to transform the global economy once again.
Sky high, why it's getting a lot harder to not just buy a house, but also to rent one. All that and more tonight on Nightly Business Report for Thursday, June 9th.
Good evening, everyone, and welcome. Bold market calls. Hedge fund billionaire George Soros is worried about the global economy, so much so that he decided to do something about it. After a long hiatus, he's trading again. This time, he sold stocks on the assumption they'll go down because of a slowdown in China and issues in Europe. And he bought gold, an asset that's viewed as a safe haven during times of economic turmoil. Another billionaire investor, Carl Icahn, in an interview earlier today, said he agrees with Soros.
I can't help but think he has a couple of real good points. I think there is. I've been saying it. I think that you have a sort of a false market, buoyed by zero interest rates, and you have to be cognizant of it.
But not everyone agrees. One market strategist is calling for stocks to go higher, as much as 20% higher in the next 6 to 12 months. Canaccord Genuity's Tony Dwyer believes that a U.S. recession is years away. He sees a rebound in the economy because of rising oil prices and expects corporate earnings to grow.
So how do bold market calls in a stock market that is essentially flat, at least over the last year, impact investor psychology and investors' investment decisions? Joining us now to discuss is Frank Murtha. He's a doctor of psychology and co-founder of MarketPsych.com. There are lots of cross currents always in the market. You got these billionaires. You can easily dismiss them as a couple of old cranky billionaires, or you can say they actually know what they're talking about, and you obviously have this tension. So how is an investor to make sense of calls that are really at polar opposites?
Well, I think it helps to recognize that disagreement isn't just normal in the market. It's essential for a market. For every buyer who wants to let go of a position, there needs to be seller who wants to let go of a position, there needs to be a buyer who sees it from the opposite side. So disagreement is healthy and disagreement is fine. In a way, we're talking about peer pressure. And some members of our investing peer group have more influence than others. You just named a couple of them.
Very true. Very true.
And I think the way that investors overcome peer pressure is kind of the way teenagers overcome peer pressure. You develop a stronger sense of who you are, what your values are, your goals are, what you're good at, what you're not good at, and it gives you the confidence to proceed and not worry too much about what you hear other people saying.
It sounds like what you're saying is kind of the tried and true, have a plan, stick with the plan, and don't let emotions influence. Easier
said than done.
Absolutely.
Certainly,
Absolutely.
But yes. To that end, I mean, something that people can do when they find themselves ambivalent and being pulled in more than one direction is to help achieve a sense of emotional balance and get out of the trap of thinking in a binary mode, market good, market bad. I have to be in or I have to be out. Make what we call a stabilizing trade, a smaller trade, the purpose of which is not financial gain or anything like that. It's merely to help reset your psychology, smooth out the waves, and make for an easier ride.
I can well imagine that investors from time to time, individuals I'm thinking of, can get impatient. The market is flat. I haven't made any money over the last year.
Oh, gosh.
Or if I'm in bonds, I can't make any money in my CDs or my fixed income securities, and so I've got to go do something else. Is that dangerous?
Well, unfortunately, it's natural, and it can be dangerous, certainly. We like to think we're investing for financial reasons, financial needs, but we have these emotional needs and they need to be met. And we see other people having gains, or we feel like we're not making the progress we need to be making. It creates an emotional need for us to do something about it.
Sometimes the best thing is to do nothing.
Oh, absolutely.
Don't just do something, stand there.
Right. No, exactly right. I think that certainly when investors feel this pull and they get a little bit restless, they may be tempted to make more emotionally impulsive, poorly thought out moves.
So guard against that impulse.
Absolutely. And one of the ways you can do that is to help mitigate that. And that is to do something small and save yourself a bigger problem down the road.
Frank, thank you very much.
You're very
Dr.
welcome.
Frank Murtha with MarketPsych.com. We appreciate it.
My pleasure.
Well, on Wall Street today, the Dow and the S&P 500 snapped their 3D win streak A 3-day win streak as oil prices pulled back from an 11-month high and the bond yields fell. The Dow Jones Industrial Average finished the day down 19 points to 17,985. The Nasdaq fell 16 and the S&P 500 was off 3.
One of the reasons why George Soros is negative on the market is because of the possible exit by the UK from the European Union. The vote is just 2 weeks away, and Wilfred Frost tells us what's at stake if the country votes to leave.
The first thing to note is that nothing actually happens on the 24th of June. The referendum is not a binding law. It would just signal the wish of the British people and spark negotiations to begin setting the terms for separations. If the UK government invokes Article 50 of the Lisbon Treaty, then a 2-year period begins before they leave. But it's possible they'll begin negotiations in a more relaxed and amicable fashion without that 2-year restriction. Now, here are the main issues that the divorce lawyers will be arguing over. Free movement of people. Will Britain be able to stem the flow of immigrants whilst minimising rights it loses for its own citizens on the European continent? Second up, free trade. Will Britain get to maintain the status quo it enjoys at the moment of free trade, or will the EU punish them for leaving? And finally, will the UK be able to continue to passport financial services, which allows EU members to offer financial services in other EU countries based on domestic regulation? Switzerland manages that at the moment, but will the likes of Frankfurt and Paris be hungry to steal market share and block it for the UK moving forward? So whilst the 24th of June would see no immediate legal action, the intermittent period of uncertainty could be very damaging. Now, one final thing to watch. Would Prime Minister David Cameron have to resign? He maintains at the moment he wouldn't, but there would be huge pressure on him to do so in the event of an exit vote. This could lead to other candidates stepping forward. It would likely delay Brexit negotiations until a new government is formed. Lots at stake, just 2 weeks to go. For Nightly Business Report, I'm Wilfred Frost.
In Washington, President Obama endorsed Hillary Clinton for president, saying, "I'm with her." Just before making the announcement, the president met with Senator Bernie Sanders at the White House, who said he was not dropping out of the race, but would work with Clinton to beat Donald Trump.
I am going to do everything in my power, and I will work as hard as I can to make sure that Donald Trump does not become president of the United States.
John Harwood joins us now from the White House. John, it wasn't necessarily a surprise that the president formally endorsed Ms. Clinton today, but what conclusions can we draw from the statement that Bernie Sanders made right outside the White House after meeting with the president?
Well, Sue, the only surprise was the choreography. We knew that President Obama had talked to Bernie Sanders on Sunday. Now we know that he informed Bernie Sanders that he was going to endorse Hillary Clinton. Bernie Sanders asked him to wait until they had a meeting today, which he did. The video of President Obama endorsing Hillary Clinton was made on Tuesday, so this was all planned. Now, in terms of Bernie Sanders' statement, it was as much as Hillary Clinton could have hoped for, and you could see it in the clip that you just played. It was the fact that he said he was going to devote all his energies to defeating Donald Trump, didn't criticize her at all. It's a little early for him to come out and just say, I'm getting out of the race. That's going to be a process, but I wouldn't expect that process to take too much longer.
Well, speaking of Donald Trump, the great tweeter was in New York today trying to fire up his fundraising operation. How's that going, John?
Well, not so great. Here's the challenge. When you're Donald Trump and you have largely self-financed your campaign, which you ran very cheaply because of your power on social media and on the broadcast media, you then have to, if you haven't had a lifetime in politics and a whole financial apparatus, you've got to create one quickly. Hillary Clinton's been creating one for a very long time. She has the capacity instantly to turn to general election fundraising. He's got to develop that capacity. He has said he would raise $1 billion for the campaign, but it's not clear that he's going to be able to achieve that. One of his aides said today, well, we may not need that much. We'll see.
John Harwood at the White House. Thank you, John.
And still ahead, 100 years ago, the Panama Canal changed the global economy, and now it's changing things again.
I'm Mary Thompson at the Panama Canal, where we tell you about the dawn of a new day in global shipping. That's coming up on Nightly Business Report.
In Panama, a new era in global shipping launched today. A third lane, 9 years in the making and able to handle some of the biggest cargo ships in the world, passed a critical test ahead of its official opening at the end of the month. As Mary Thompson explains, it could reshape trade and the world economy.
Under a blistering sun, workers gathered along the banks of the Panama Canal's new lane. Costing $5.25 billion, it faced a crucial test, the passage of the first ship through its Atlantic locks.
It defines a moment.
The moment Thursday, a success, according to Giuseppe Querta, CEO of the project.
Today has been extremely smooth, exceptionally smooth. The gates operated very well, so all the parameters have worked exceptionally well.
The test making way for the lane's official opening at the end of June and a new era in global shipping.
It means a shorter route. It means a reduction of CO2 emissions, so that's good for the world. It means better prices for the people that are putting their merchandise because they're going to get economies of scale.
A third larger than the canal's old lanes, bigger ships that carry over 45% of the world's cargo can now access this 50-mile shortcut between the Atlantic and Pacific Oceans for the first time ever. Here's a canal's Ilya Murata.
The biggest container vessel that can come through the existing locks can carry between 4,400 to 5,000 containers. In the new locks, we'll be able to put ships that carry up to 14,000 containers.
Boston Consulting Group estimates this could cut the cost of shipping goods from Asia to the East Coast by 30%, as long as the ports and railroads are ready.
And they're spending billions to get there. Before this lane, most big ships went to the West Coast because they couldn't sail through the canal. Now East Coast ports are dredging, updating, and expanding their facilities to accommodate the big ships and move cargo railroads will take as far west as Detroit.
102 years old, the canal considered a wonder of the modern world. Its new addition, with gates 10 stories high and lanes that cut crossing time by 2 hours, a major feat as well.
This is obviously the result of 110 million man-hours of work and almost 6 years. 30,000 people have worked on this project.
A project for the ages, ushering in a new age of shipping. At the Panama Canal, I'm Mary Thompson for Nightly Business Report.
Coffee gave sales a jolt at JM Smuckers, and that's where we begin tonight's market focus. Demand for the company's Folgers and Dunkin' Donuts branded coffee, as well as its pet food products, helped to lift profit and revenue higher. Nothing, of course, beats dunking your milk bone in a cup of joe. Smuckers also gave a full-year outlook well above expectations. You really ought to try it. Shares up just about 8% to 143.23. European Union has given the green light to the proposed merger between U.S. food distributor Cisco and its European counterpart Brakes Group, saying the acquisition does not raise competition concerns. The more than $3 billion deal expected to be completed come July. Cisco shares up a fraction to $49 even.
Vail Resorts reported better than expected profits in the latest quarter, thanks in part to a rise in sales for season passes. The ski resort operator also saw revenue climb, although those results were a bit shy of targets. The company also raised its yearly guidance. Shares of Vail Resorts rose nearly 3% to $139.20. The National Highway Traffic Safety Administration will be looking into reports of potential suspension problems found in Tesla's Model S. The agency's review will determine whether a recall might be necessary. Tesla also announced it was yet again making a lower-cost version of its Model S vehicle. Shares of Tesla down more than 2% to $229.34. A regulatory filing showed same-store sales at Urban Outfitters current quarter are falling in the mid-single digits. Shares of the clothing retailer plunged after hours following the news, on top of the 1% plus loss during the regular session. They closed at $27.93.
Mortgage rates fell for the first time in 4 weeks. The drop followed a surprisingly weak employment report last week and increased concerns about the health of the economy. Freddie Mac says the average 30-year fixed-rate mortgage fell to 3.6% from 3.66% the week prior.
Well, mortgage rates may be near record lows, but rental and home buying prices are sky high. According to Trulia, prices in many of the nation's largest markets are soaring. Even outlying areas just beyond the big metro urban areas are seeing higher rents. So what's behind the increase, and what does it mean for the housing market? David Wiedner joins us, Managing Director at Trulia Research. And it's good to have you back, David. We always love having you on the show.
Hey, Sue, good to see you.
Let's start, first of all, with why you think rates, not only are, rental rates as well as home prices are moving in tandem at such sharp rates to the upside.
Well, Sue, our report looked at the top 25 rental markets in the country, and this is the second time in the last year we've done this report, so we knew that prices were high. What we really found this time was that there are just not enough listings available. There aren't enough rentals available. So there's this sharp drop in supply. And of course, we have this tremendous amount of people looking to rent. And of course, this was caused by a couple of things. First of all, people are migrating to cities, to the job centers to find employment. And they're not able to buy for a couple of reasons. First of all, they've been displaced by the housing crisis. And secondly, they're pushed into the rental market because there's no inventory of homes for sale. So we've got this kind of double-edged sword where people can't buy because there's no inventory, and then they're all rushing to the rental market, so there's not enough rentals on the market as well.
You know, we toss around the word affordability a lot, David, and I have sort of two questions. What does affordability measure specifically? And then where is affordability the worst in the country?
Right. So the way that we measure affordability is we take a look and you figure a perspective, somebody who's looking for a home is going to spend around 30 to 40% of their income on housing, max. So when we go around and we take a look at median household incomes in these markets, and then we look at the median rents for 1-bedroom, 2-bedroom, 3-bedroom, so on, we can determine where not only how many units are available, but with those prices, how many are affordable. And we're finding surprise places that are where rents and the lack of affordable rentals is actually exceeding what we're seeing in San Francisco, which everybody knows about. So we've got places like Portland, like Phoenix, Seattle, parts of Dallas. We're seeing places where just people who want to actually rent a place can't find a place.
Very quickly, David, because I've only got about 30 seconds left. How does this resolve itself?
Well, that's a great question. Basically in many markets around the country, we have a housing shortage. San Francisco, Seattle, Washington, D.C. And what has to happen there, there's a lot of safety valves. One is you can build more housing. Well, that's a tough road to hoe. Another is people can just pick up and leave. They can go to places where they can afford housing, and that means further away from jobs. And ultimately, businesses may find it better, lower cost of living places to move to.
All right. On that note, David, thank you so much for joining us. David Wiedner with Trulia Research. And coming up, will Disney's dreams come true in China? We have a first look inside its big investment in Shanghai.
More than 5 years and $5.5 billion later, Disney opens its biggest and most expensive international resort in China. And Disney knows that not only are the risks high, but so are the rewards.
This is, I think, a great market for Disney and a growth market as well. Obviously, the size of the market, the number of people is another reason. But this is an extremely important step, the biggest step actually that we've ever taken anywhere to grow in a market.
Eunice Yoon takes us inside the gates of Shanghai Disney, and it won't cost you a dollar or a yuan.
This is the largest Disney castle for the world's largest population. With the opening of its $5.5 billion theme park in Shanghai next week, the U.S. entertainment giant hopes to dazzle China's consumers. But Shanghai Disneyland isn't the Disneyland Americans may be familiar with. Lead designer, or Imagineer as Disney calls her, Chang Shu, told me the company had to reimagine the whole park, first taking into account that in China, 3 generations often live under one roof.
Our research tells that Chinese people love to bring their grandma, grandpa, their little kid all together come to the park. So we've designed this area that you have a lot of green area and a lot of benches. Grandma, grandpa can just sit there and enjoy the view, take photos for the family, and just, take a break.
80% of the attractions here are unique to China. Disney takes on Chinese tradition, adding new rides, and remaking old classics.
We realized the franchise Pirates of the Caribbean was really well received in China. People love Jack Sparrow. That's why we, for the first time, we built this pirate-themed land at Treasure Cove for our Chinese guests.
Some things would be recognizable in the U.S., though they're even a bigger crowd pleaser here.
This is one of the most popular spots in the park. Every time we come by here, there are lines that are weaving all the way around. And it's all for a turkey leg.
Okay.
So how long did you wait for this turkey leg?
About 2 hours.
You waited for 2 hours for that turkey leg?
Yes.
Disney may have reinvented the park, but what the people here like and don't like doesn't seem all that different from elsewhere in the world.
We loved the Pirates of the Caribbean.
The lines are just way too long. I have been waiting 3 hours for a ride.
A sign the Middle Kingdom may be ready to embrace the Magic Kingdom. For Nightly Business Report, I'm Eunice Yoon in Shanghai.
Turkey legs are the best. Google co-founder Larry Page is reportedly secretly building flying cars, and it's taking place in the building that houses his personal aviation startup called Z-Aero. As first reported by Bloomberg, Page has financed this project with more than $100 million of his own money.
Well, Larry Page is wealthy enough to fund his own startup. Those just getting off the ground generally have to look for investors to help turn their ideas into reality. One company wants to make that process a little easier. Kate Rogers reports tonight from Los Angeles.
Look no further than Mark Zuckerberg for proof that great ideas can advance well beyond the four walls of a college dorm. This week, college startups from around the country are hoping to duplicate that success at the Recess Pitch Finals in Los Angeles, a March Madness-style competition for co-eds who want to become the next big thing. They're up for a full scholarship to venture capitalist Tim Draper's Draper University in Silicon Valley and a shot at $250,000. The festival has been to 18 campuses in 6 regions to narrow down the 10 finalists.
I'm super excited to be here in Los Angeles to show off our company and what we've done so far.
Just get practice pitching and then also see if we can win some money and then this seemed like a really cool experience.
Recess has come full circle, having been hatched by Indiana University seniors Jack Shannon and Deuce Tevenow in 2010 as a music festival. By 2013, it had expanded into a pitch competition and mentorship event, followed by a concert. It's in the vein of South by Southwest at college campuses to help students gain access to resources and connections to launch businesses. Shannon blind emailed Mark Cuban post-graduation, and he became the company's first and primary investor.
We infused, the idea of entrepreneurship and startups into our music festival that we were currently doing with the mission of finding and identifying young entrepreneurs that were just like us, that were building a business in a dorm room, and wanted to give them the same opportunities that we had to turn that into a real business.
Since 2013, Recess has received 1,000 pitches, and startups that have gone through the program have gone on to raise $12 million in funding from big investors, including Cuban, Draper, and Salesforce CEO Mark Benioff. That opportunity is the reason Recess launched in the first place, to expose startups to mentors and investors they might not meet on campus.
At college, that's where you get a lot of exciting, ideas amongst your colleagues, and you're coming up with really cool, innovative solutions. But part of it, we don't always have the best training once you get out into the workforce about how to even start a company.
And after tonight, Recess will make it a little easier for the next potential Mark Zuckerberg. In Los Angeles, for Nightly Business Report, I'm Kate Rogers.
And that does it for Nightly Business Report tonight. I'm Sue Herrera. We'd like to remind you that this is the time of year your public television station seeks your support.
I'm Tyler Matheson. Thank you for your support and have a great evening, everybody. We'll see you back here tomorrow night.